Welcome all. Today, I have Dawar, CEO of LenderPrice, joining me, and we're just talking about the future, talking about technology, talking about where mortgages are heading. But just a quick shout out to this guy. One, him and I are working on a couple other fun ventures off to the side. They've been elite. But for those that don't know, when I first got launched at AIME, it was definitely not the easiest of things, and nor should it be. Anything you start or jump into should never be easy. I think that just sets you up for failure if it is easy. But he was one of the first people I reached out to, was trying to find some opportunity for vendors, some opportunity for our broker partners, just finding something. And it wasn't like people were jumping for joy to help AIME at the time. But this guy right away offered us a product with Lender Price, gave us free pricing engines, was all on board to help the broker community and all on board to push us forward. And we cannot thank you enough for that. It's been 2 years now, believe it or not. Dawar, how are you doing today?
I'm doing well, and thank you. Thank you for that intro.
Yeah, yes, sir. Thank you. And I'll get us started here. So for those that don't know about Lender Price or your background, to kick us off, what problem in the mortgage space pissed you off so much? So where, Dawar, you said, you know what, I got to figure something out from the pricing side of things. What made you start Lender Price? Where were the issues actually stemming from initially when you first did this?
Yeah, it was several things. I mean, one was the cost of technology. And I think what really frustrated me or pissed me off was how outdated and fragmented pricing technology was. The company that we're constantly competing against is a company that has been around for 3 decades. It was actually built a long time ago in the late 90s. So loan officers and lenders were relying on these old the legacy systems that really couldn't handle real-time data or adopt to market changes quickly. And still today, they're built on old monolithic architectures. So that's a problem, because I think that as the industry starts moving towards, creating better efficiencies, trying to lower cost of loans, and I've got a huge take on that. I saw an opportunity to modernize that and build a platform that's dynamic, it's API driven, it gives lenders full control and transparency over pricing. We've incorporated AI. We're continually incorporating AI in various other ways, and that's really what led us to build Lender Price.
You know what's crazy? So I've been at this now for 15 years almost, and you've been in the space how long, roughly?
I've been in the business. Well, I've been in the space since 2001.
Yeah, so you're talking now at this point 25 years. So
Yeah.
10 years more than me here. And what I've noticed is I feel like I've seen these 7-year cycles where new technology can finally start. I don't want to say taking over, but it starts replacing those archaic structures. Because what happens is you're inside of these refinance bubbles, and we had one that happened for so long, and now we've been out of it for a bit, where people don't want to change. They don't want anything new. Things are working. They're making money, hand over fist. And it's like you're just not seeing as much adoption. But what we're starting to see now is people are looking for that next best thing. And you talked about AI and how you're constantly using APIs and making things come to the forefront. But what are you seeing people right now underestimate that can change the game over the next 5 years when it comes to technology, pricing engines, or whatever the case might be?
Yeah, I think the biggest thing that people underestimate right now is the power of data and automation, especially when combined with AI. Everyone talks about AI, but very few are actually leveraging it in a way that drives real business outcomes. For example, using predictive analytics to anticipate borrower behavior. I mean, we're seeing some of that, or automating pricing adjustments in real time based on market conditions. I mean, that's something that we're working on. And I think that's the real transformation. And I think that's where real transformation happens. The lenders who embrace the level of intelligence and automation will not only operate more efficiently, but also deliver a far better borrower experience.
What do you say to those And I want to ask you more on that, where you're doing the real-time updates and we're seeing you have a client-facing, consumer-facing aspect to your business. So I do want to get back to that in just a second. But what do you say to those people? Because what I run into sometimes, especially now diving into the tech space like I have, is you talk to a lot of people that want to know it all. All right. And I'll use those quotations very carefully here. And it's not necessarily the tech people, but it's like sometimes I'll talk to loan officers, certain lenders where it's like, oh, we have the best system possible, or we know how to do the data and we know how to look at all the different algorithms. How do you approach somebody like that and explain to them, hey, you're missing something, you're missing the big picture here, and without coming across as condescending, it might be the best word for me to use here.
Yeah. I mean, that's a great question, because honestly, I completely understand that mindset. A lot of lenders and loan officers have built systems that work for them.
Yes.
And there's pride in that, right? But what I usually tell people is that technology isn't about replacing what you know, it's about enhancing it. So the best systems are the ones that adapt and evolve with your business. So, here at Lender Price, we don't come and say, here's how we should do it. We focus on giving lenders the flexibility to configure. So we have this the configurability aspect of our system. And there's pros and cons to that, because sometimes when you tell a client, hey, you can configure the UI to however which way you want to configure it, they kind of boil the ocean sometimes. And then they can never come to terms as to how they want it, and they keep making changes. And ultimately, when you're tasked to do something at an organization and you're like, hey, we're going to use this vendor, they've got this feature, you can, configure the UI however which way you want. Leadership at the very top is looking at deadline. When is this going to be done? Right. But then, if you boil the ocean, you're going to extend that deadline. And sometimes that doesn't make the person who's actually working on it look good. But I think that we focus on giving lenders the flexibility to configure, test, optimize their own strategies using real data. And once they see how automation and AI can surface insight they couldn't see before, it stops being about knowing it all, and it becomes about leveraging the right tools to make smarter decisions faster.
So y'all, for you that don't know, his system basically allows you to connect with, it allows you to connect with every one of your wholesale lenders, and they'll have an open API. They take care of all of that. Now, they also have a consumer-facing aspect to their product to where you can embed this onto your website, certain aspects of it. Your clients can then see where rates are at, what rates are doing. You can upload your past book of business and alert these clients accordingly. So what he's talking about, the UI perspective, they give flexibility for you to make it look as, I don't know, to make it look as sexy as you want it to look. But what happens is you run into issues here where you start to focus simply on the UI and the design of it, and it takes away from what the big picture actually is. So working with Dawar personally, he always gives frameworks like, hey, here's how I would look at it. Here's how you can make a decision faster. But do you have tips and tricks on making those decisions faster? Like, your brain works from a framework perspective. Your brain's pretty dialed into ABC at this point. But how do you teach us loan officers who are very manic at times and very impulsive at times to, hey, work with inside of this frame and really get to the big picture here?
Yeah, I think the decision-making in tech, especially when you have so many options, comes down to clarify of purpose. The first thing I always tell teams is define the problem before you define the solution. Once you know exactly what outcomes you're trying to achieve, whether it's faster pricing, better borrower engagement, or improved margin control, the rest becomes much easier. And I also think that right now it's super important is, we have this a product called APR, and you guys are leveraging it. It's all about recapture. Like right now, like if you're a loan officer, you've got who knows how many borrowers that you've successfully refinanced, got them the loan, got them the home, the dream home that they wanted, etc. You need to get in front of those borrowers today and if there's a system out there that you can upload all your past borrowers, and the system can actually manage the, I closed you at a 7% rate. Now rates drop below. I mean, it's under 6 right now. And if you're not
Correct.
cultivating those borrowers today, your competitor is, or some other large institution. Because I could tell you this, the large servicers, that's what they're doing. And then they're servicing their, you had UWM bring this up, and now you've got Rocket doing this, and they're sending out they're sending out massive mailers, and they've got technology that reaches out to these borrowers and lets them know that, hey, you got to refinance now. We have a solution. We're partnering up with Jonathon to offer that to your borrower, to you to use. You should use it.
And you have all that data, y'all. So for those listening in, like, this is what he looks at probably on the regular, where he's seeing what's happening on the secondary markets. He's seeing who's retaining servicing, what they're doing with the servicing books. And so, I wrote this down: define the problem before we define the solution. And it sounds like the biggest problem right now, and I'm in full agreement with you, is the fact that retention of our past book of business, especially as brokers, it's out for the taking. And if you're sitting there trying to make it perfect and, I want it to look exactly like this, you're setting yourself up for failure, y'all. You just need something to get in front of these consumers as consistently as you can. And you need something that's affordable. You need something that's not breaking bank. You need something that works. You need something that's efficient. You have something here in front of you. My challenge to all of you is, if you're not doing this, what are you doing, is my first question to you. And if the answer is nothing, you better be doing this.
Right.
That's just truly how simple this is.
Yeah. We're the same technology that we're offering the large servicers is the same technology that we're offering brokers. And all they have to do is use it. It's mind-boggling, because I'm like, look, you could quadruple your monthly production easily by having a system kind of automate that for you.
And it is easy right now too, Dawar. We're getting the data that's coming out right on the secondary markets, and they are turning these clients over very quickly right now. These are ones that have closed less than a year ago, roughly. Yeah. That's 6 month it's roughly 6 to 18 month is the marker right now. But the phones are being pounded right now. And if you're not calling your client, somebody else has a lot of money, these massive institutions, to his point, and they have a lot of people that are just sitting at a desk. I was one of those people, and we would sit there for 12 plus hours a day. By the way, there's nothing wrong with that. I'm not knocking that business model, because, it works. These companies are making millions, if not billions of dollars doing it. And so talking about it from a CEO perspective, you have these broker owners that are leading the charges. I have a question for you. As a CEO, what are some of the lessons you've had to learn the hard way that have shaped the way you make decisions now? This is kind of in line with, hey, if you haven't done this before, you better start doing it now. But what are some of those decisions or things that pop up in your head that have shaped the way you lead nowadays being a CEO?
Yeah, I mean, I've learned I learned a lot of lessons the hard way.
Yep.
I've made a ton of mistakes. But one thing that really stands out is the importance of focus. Earlier on, I wanted to solve every problem at once. And for some of you that know, I mean, I spent $10 million building a point of sale, because at one point, point of sale was really hot, right? And it's like, you had Blend, you had Roostify, everybody else, and everybody said, okay, the point of sale is going to decision a loan in 5 minutes, because, that was Rocket's, big marketing pitch at the time, right? So everybody got in there. You had private equity, you had venture capital, everybody poured a lot of money. Well, that didn't happen. I mean, you can't decision a loan in 5 minutes. So really, focus. So early on, I wanted to solve every problem at once, and that's a good example. But build every feature, serve every type of lender. I mean, that just didn't work. It doesn't work. But I realized that trying to do everything dilutes your impact. Now I'm much more intentional about prioritizing what truly moves the needle for our clients. So we're while others are saying, yes, I'm going to do everything, we're being very intentional in saying, we've got a consultative approach, and we're saying no, and we're trying to give them reason, because some of these lenders, some of our clients, they don't know. And then if we don't provide them with a consultative approach and say, look, this is the reason why what you want to do, it doesn't make sense. And if we don't do that, and if we just say, okay, yeah, we'll build it, we're just wasting their time. We're wasting our time, and nothing good comes out of that.
No, that's the push button, get mortgage. I was there during that time, right, where everybody's trying to jump on that bandwagon back in the day, right, from the POS perspective, that Rocket was kind of pushing along the lines. So I did not know you invested that much money into something like that.
Yeah.
And then, was that like, just out of curiosity, was that a lot of private equity? Was that just, has fundraising always been part of what you've had to do?
Yeah. I mean, it's raising money. I mean, software is not cheap. It's expensive. No. So it's very, very expensive. So, I mean, the hardest part for us, I mean, we started off as a pricing engine, but then we didn't, what I learned not to do is that then, then you look at the shiny ball, and, the market at the time, private equity, VCs, everybody was saying, look, you got to be doing this because this is going to transform how mortgages are done. And then and then to some extent, you're like, oh man, I don't know if this is if this makes sense, but okay, fine, we'll do it. And then you realize that, it really didn't do anything. So we have that product, we actually offer that product for free too. So if any broker wants it, we have that product. We have thousands of brokers that use it today. But I think that now, with agentic AI and all the other things, I think that product is going to get better. It's still like right now I'm going through a commercial loan, right? Yeah. Where I'm trying to refinance $1 billion that I have. And it's like, it's still stuck in the old ways. I mean, there's a lot of, Encino's got a good commercial product that they offer mid-sized banks, but it's still done the old traditional ways. It's send me your documents. So it's like, I still haven't seen a change of that. I mean, even when I refinance my, my house, it's like, it's a part of it. It might be, hey, log on to this point of sale, start the process, but ultimately is I need your documents.
Every time.
And I think the biggest problem, but and sorry to cut you off, Jonathan, is that
no, you're fine.
Our problem is policy. Policy is our problem. Our industry is plagued with a lot of policies that just doesn't make sense. And then you could layer in technology, but we got to refine these policies. We got to make it better. We went from good faith to an LE. We went to a one application to another application. In my personal opinion, did it make things better? I don't think it did. I think it's still an application that you got to fill out, and it's still a loan estimate. To look at a good faith estimate and look at LE and go, okay, well, this this is much more transparent to a borrower, and they know exactly what they're getting. I don't see the difference.
I don't either. I love that you just said that. I was in the space when we switched from GFE to LE.
Yeah.
And then the TRID and the 3 days and all of that. It's the same thing. I'm having to explain it to a consumer regardless of it being the GFE or the LE. I really am. And even nowadays, people, I'm just going to use it. People will manipulate the LEs in their favor all the time. I mean, it's crazy. You'll watch them move out taxes, move out insurance. You see the same thing happen. I agree with you wholeheartedly. One of the things I said is you are starting to see as Congress and Senate and all of those folks they are aging out, right? Where you're starting to see a different kind of crowd come in, a younger crowd come in. I do think you'll start to see more policy change, but I agree with you. I was in commercial space in California. I mean, it is as archaic as it gets, and it's still as archaic. They're making all this money, and it's 9 months for due diligence, environmental reports. You're having to do all these extra steps that it has to go through the city. And then God forbid you live in LA, please excuse me. I mean, you're talking months, y'all, to get an answer of yes. And then if it's no, you have to redo the application. Yeah. Like you don't get to just update it. So I got passionate about it with what you just said, because I agree with you wholeheartedly with policy change.
That's the frustrating part for borrowers, is because they don't know what they don't know.
No,
they're just sitting there and they're like, hey, what's going on with my loan? Well, it's going through this bureaucratic process that's got a lot of policies that I've got to jump over hoops to get things done. And
And
it's
there's
like
only one
technology.
guy.
And then so look, as a technology vendor, I hate it when technology vendors go out there and go, look, we're going to drive the cost of loans down. And well, it hasn't done it. I mean, all these advancements in technology, it's the policies that's going to drive the cost of loans down. Remove the policies, make the policies better. That's what's going to drive the cost down.
You're spot on. I think there was a report that said the cost to originate is actually up.
Yeah.
Compared to what it was. I forgot the exact time frame. I don't want to misquote it, but I'm seeing the same thing, and it is unique, and that does lead me in before we go on a tangent here, because I feel like we can spend all day on just that topic, because it does drive me crazy too. And you are spot on. Like one guy or gal has this license that they got 30 years ago, and they're the only ones that can make the final decision. It's just crazy to me. But when it comes to making decisions, since we're on that track, you're someone that has looked at data now for God knows how long of your career. I'm really starting to understand data at a much higher scale now than I have, and it does impact my decision making now. But with your experience, at what point do you go, okay, I know the data's saying this, but my experience and my gut are telling me something different? I'm sure you go through that quite often, just being in the space that you're in. But what pops up? What experience plays into effect when you're making that decision that goes against the data in some instances?
Yeah, I think from my standpoint, I've learned that decision making is really about balancing data and intuition. Early in my career, I realized heavily on instinct, and while that helped me move fast, I realized that scaling a company requires structure and data-driven discipline.
God, the data-driven discipline when it comes to building your team. How are you obsessed with that when you're bringing on certain talent nowadays? Where it's, hey, do they make decisions quickly? Are they able to look at data properly? How has that helped you? And then does that also help you get rid of people fast?
Yeah, data helps me identify patterns, right?
Yeah.
Perform metrics, collaboration trends, even how teams execute under pressure. We use data a lot in terms of evaluating employee performance, because what happens is that if you've got a team and you've got some low performing employees, they drag the team down. And what drives me nuts as an organization is that when I have managers fail at making hard decisions, and I hate to say that, but replacing that individual, because it does put a lot of stress on the good people working in their team, really pushing hard. And then so that data is really important to us.
I love that. That's you learn that as you go on. And it's like you're trying to save everybody, but what you realize is you're costing the rest of your people, like their time and their efforts, because you're sitting there, spending way too much time on one person when you're giving them all the resources, but they're not executing at a high level. And that's really tough in many instances, but it is necessary. Like, you got to protect your bottom line. It's very important. If the business isn't doing well, if the business isn't flourishing, it's like that same adage where you're on a plane, right? Put on your mask first. If you're not getting the oxygen to your business, well, then it can't provide for everybody else. It can't put food on everybody else's table. That's such a big piece of it. When it comes to the data right now, where are you seeing loan officers, broker owners? Where are you seeing them do well, right? How are they leveraging the data properly that you're providing them? But B, where are you seeing them? I don't want to say drop the ball, but an area where they can improve much more drastically just based off what you're watching.
I think you have to make your business healthy first, because that's what allows you to take care of your people and your clients, right? A big thing for us has been turning a corner. When you're a company like ours that's financially backed, turning a corner to profitability was a big thing for us.
Yeah.
Because prior to that, you're stuck with scaling fast, but at the same time you have a burn, and your burn is big, and you're trying to reduce your burn. So it's always hard to manage when you're in that period. So for us, it's been turning the corner to profitability. because that really helped us, kind of like, mature as a company. And I always tell my team, we can't pour from an empty cup. When the company is strong financially, operationally, and culturally, that's when we can really innovate, support our partners, and create a long-term impact. You see a lot of the startups, and what irritates me the most, and I got to tell you this, Jonathan.
Please fire.
It irritates me the fucking most is when I hear a company raise a ton of money in our industry, and you go to LinkedIn and everybody's like, congratulations. Housing Wire is like, congratulations, post it. Company raised $50 million. Yeah, okay, they raised $50 million, but how are they doing operationally? Is that a down round? We've heard time and time again, companies raise a ton of money and they go out of business tomorrow.
Oh my God.
Celebrating the people that have never raised money and that have succeeded. What about the companies that
Can you give us insight into that, Dawar, if you don't mind? Can you give us like your real world insight? Like you're one of the few people that has experienced it, but what do you mean by that? Like from the round perspective, is this a down round? Can you just kind of elaborate just a little bit on that? Because this is really fascinating.
So like, you've got investors and then they invest money in you and they want you to grow. And I think, VCs are probably the worst. So I'm sure if VCs are out there, it's great because I don't need your money anymore. So
yeah,
I never had any of your money and I don't need it. But they tend to invest in industry, and they look at the TAM and they look at how size, the industry is, and they pour a lot of money. And then they expect you to blitzscale, and they expect you to scale really fast. So the problem with our industry is like, we're not an industry that moves fast, right? No. We're a slow play industry. The longer you're in it, the better you're going to be. And you got to provide trust, accountability, and the fact that you're going to survive. And so at some point, these investors get sick of putting more money into the company. And that's when, then so the company ends up burning too much cash. So now they have nothing, right? So at first it's like, hey, big announcement. So-and-so got $30 million invested in them. Now it's like, wonderful, this company is great. And then all of a sudden they burn through money because the VCs want you to scale really fast. Yep. And if you can't scale, then it gets to the point where they start diluting you. And they're like, okay, fine, you need more money. Now it's a down round. Now you're not going to get, now we're going to invest more money in you, but you're not going to have as much ownership.
Wow. Okay. So that's the big difference that people don't talk about.
And then time and time again, these hardworking people, founders that have worked at these companies for a long period of time, walk away with nothing. But yet, they're known in the industry as being, hey, but they're celebrated because they've raised a ton of money. At Lender Price, I've always treated this company as an entrepreneur that doesn't like to raise money, although we've raised money. So, and that's mainly because prior to Lender Price, when I used to own a mortgage company, I never raised money. If I had money in the bank, I would use it. If I didn't have money in the bank, then I wouldn't do certain things, whether it's marketing or hiring people and whatnot.
Dawar, that was very eye-opening. I didn't realize that, because basically it's one, you have a set timeline at scale, right? So whatever that timeline might be that they give you, it's like, hey, we'll give you 30 million, but then if your run rate's too crazy, you're not scaling to their expectations. All right, they'll give you some more, but they're going to dilute your ownership as part of it. You're basically stuck at that point as an owner.
And there's in these agreements, whether it's where, like they've got picks, they've got other ways where at the end of if they're making money hand over fist, where they've got the math where at the end of the day, whether you make it or not, they have the potential of walking away and selling it at a certain price and just getting their money back, the investors.
That's so different. No, that's really good, man, because it's like you're on a timeline. If they don't like what you're doing, they dilute you. Then you're stuck because you're like, okay, what do I do? Do I say no thanks? But now all my people that I have hired, they what are they going to do? So that responsibility goes up dramatically, and it's like, all right, it is what it is. I'll just sign this agreement. You're diluting 10, 15, 20% to get even more money. But then if you don't execute, it's like goodbye. Now your timelines are less and less.
It's a combination of it's a combination of the dilution and terms where they're still making money off of, you still have to, pay them dividends. So you still have dividends every year that keeps accumulating. So a combination of the dilution and the dividends and other mechanisms, in the agreement, you're going to walk away with nothing. You could potentially walk away with nothing.
Thank you for that. You're one of the very few people that has that insight. Not many people have raised that kind of capital in the past or have that experience. So that's really helpful. Like I've gone through my, we did a small acquisition and it was different. It wasn't like raising capital. It was a full buyout. So I've never seen it from the other lens of it before. Just to keep us back on the broker side of it, dealing with tech, it's good until it isn't. Right? Like people just all gun ho, all excited about it. But what does a healthy tech broker relationship look like? And then where do those relationships usually break down? So, okay, up front, it's really healthy. Lender price, the broker, here's what healthy looks like. And then at what point have you seen any kind of good relationship start to break down when it comes to the tech and the mortgage broker?
Yeah, I think a really healthy tech broker relationship is really built around transparency, collaboration, and shared goals. It's not just about selling software. It's about understanding the broker's workflow, their pain points, and aligning technology to actually actually solving problems. I've been in the business since 2001. I was a broker. I was a lender. I've got a graduate degree in computer science, so I know both worlds. But ultimately, I still have my originator license. I've originated. I still hold it. I still have a broker's license for real estate in the event that I want to buy real estate.
Yeah.
I think it's great. It's good to understand, both sides. But the best partnership happens when both sides are invested in outcomes, not just implementations.
I love that. And when you see the breakdown, is it the outcome? It's like their only focus was the outcome. Is that where you'll see potentially disconnect down the road?
Exactly. Yeah. I mean, that's usually where things start to break down. So when the focus is only on the outcome, people tend to overlook the process and the collaboration it takes to get there.
And they just want it so fast too. Like I've noticed that, right? Where it's like, hey, this needs to be done yesterday. And then nobody's putting in the extra work. No one's putting in the extra time. No one's setting up the system properly, right? No one's going through the onboarding calls, none of that stuff. So that's usually what I see a lot of as well.
Exactly. Yeah.
From your perspective, so one of the things I'm leading another organization now as well. I'm on all these demos constantly now. So demo after demo, people want to, people are interested in our business and that's great, very exciting. But what I've had to find is sometimes I'll see like a really nice pitch deck, and like the slides are really clean. But then when it goes to actual implementation, it's a dumpster fire. It's a disaster. So how have you separated the difference between like having a really clean slide deck and pitch deck versus, hey, here's how the system actually works? Where have you found more success expressing and explaining to brokers?
Yeah, I mean, you're absolutely right. I mean, you certainly can't go off of a pitch deck. Pitch deck. You've got to get a good demo. And I mean, the most important thing, but prior to even a demo or a pitch deck, would be to go through, a Q&A phase. Help me understand your problems. What are your challenges? If it's a system that you're migrating from, over, what do you like? What do you dislike? But the biggest gap usually shows up between the sales pitch and the actual delivery. It's easy to make a deck look great, but implementation exposes whether the technology is truly scalable, configurable, and supports the solution long term. I think that the other thing too is with demos. I see this often, and I see it with one of my competitor. If you're going to go through a demo, and if they say yes, I have it, you got to say show it to me. Oftentimes, it's like, you have customers that'll go through demos, and they'll go, "Do you have this?" And then they'll say yes, and then so and then it's like checking off the box. Show it to me. Let me see. I want to see it in action. Can you demo it? And if they can't demo it, then you go, why can't you demo it?
Is that a good question for us to be asking these tech companies we're working with, which is just basically challenge them. That's why I was laughing, as I figured you'd go down that path. We've talked about it before, but one of the areas too, like I was talking to one of your team members, and it might have been
Life.
Who? Yeah, I think it would have been Life. But I was talking to him and I was asking him a question, and he said to me something that I loved. He goes, the question I asked him, he goes, "Hey, that's actually not up my alley. Let me get somebody on to make sure that what you're asking, I know how to answer."
Right.
And like, even that shows so much. It's so different, because most people say what you said, and I'm learning, right? When someone's just like, yeah, we'll figure it out. Like, that's not good. Like, that's just not good. Thank you for the shiny object, but that scares the hell out of me.
Oh, and that'll get you in trouble too, because like if they go, you'll sign an agreement, and then you're like, "Hey, I thought you had this feature," and then they're like, "Yeah, well, we'll build it for you." Like, hold on a sec. When are you going to get built? And then so you're in a contract, and then what are you going to do then? It's like, if that's a critical feature, and if they don't have it, then what are you going to do then?
Nothing. Then you're stuck, and you're going back, and you're saying, "Well, remember when we talked?" This happened to me one time, y'all. I'm telling you this from experience. And it's really hard to piss me off. It really is. I have so much patience, and I just let so much go, because I don't have time, man. I got three young kids. I'm married. I'm running 2-3 businesses. I really try to let the little things off, but I made a verbal commitment. And generally for me, like, your word is your word. As a man or woman, if you give me your word, like, I take it for what it is. But I told this person one thing. They said, "Yeah, that's fine." They sent me the contract. I signed the contract. I should have been much more meticulous in reading it. But what they had told me verbally, they said, "Oh, well, we didn't put it into the contract, so this is all I remember." It pissed me off so much. And so, to his point, you got to be very cautious. You have to ask the right questions. And I'm going to read this again to you, because I love this quote. But define the problem before we define the solution. Like, what are you trying to solve with this tech company? And in his case with Lender Price, there's multiple different facets to it that you can try to solve. So whether you're trying to solve a consumer-facing website where your consumers can log in and check interest rates right on the fly, updated every minute because of the APIs and the way they do it, great. Why is that important to your business? What's that going to help you do? The best outcome is what, right? In terms of what they charge, how cheap it is. Your best outcome is writing one loan. Like that's it. That's all you're looking for. What does that look like? How do we upload my client database? Does that cost extra? Ask the right questions. His team will put you and set you up in the right direction. Excuse my tangent on that. It's just, I agree with you wholeheartedly, and so many opportunities are missed, and you end up biting yourself for no reason. So this is just a lot of CYA.
Like, write all those questions in an email and say, respond in writing back, right back. Now you have a written, record of it.
Another question. We got a couple minutes here. So one, I want to open it up to anything you might have to say, but two, I have so many questions for you. So let me see which one I want to. Ooh, all right. This one's good. And I want you to think about this one, because you've been around so many different players in the space, whether it's IMBs, direct to consumer, mortgage brokers. You've heard the talk. You've heard those that talk the talk, walk the walk. You've also heard those that just talk and don't walk. So what is the uncomfortable truth about the mortgage industry that more leaders should say out loud, especially in today's environment?
Ooh.
You can ruffle some feathers. Don't worry.
I think that more leaders need to be honest about the fact that technology alone isn't going to fix the mortgage industry. And I'm a software company.
Yep.
I'm being honest, right?
No, I know you are.
And like I said before, maybe this is why I was harping on it, but people and policy have to evolve with it. We have layering new tools on top of outdated processes, and then wonder why costs keep rising. The real challenge will come when leaders alert. I think the real challenge comes when leaders start challenging the status quo, simplifying policies, and empowering teams to actually use technology the way it's meant to be used. Yeah, I mean, like, AI is still up in the air. I think it's going to do a lot of good, but there's going to be some challenges. But yeah, I think just going back to what I said earlier is I think more leaders need to be honest about the fact that technology alone isn't going to fix the mortgage industry.
I love that. Thank you for being direct with that, especially as a software company. That's why I asked the question. I knew you'd come from that perspective. And then what excites you right now about just the mortgage broker space and working with more brokers? You're obviously scaling from that perspective, and you've spent a lot of time building relationships. But what excites you the most right now about the mortgage broker space?
I think what really excites me is the resurgence of innovation and independence in the broker space. I mean, like, the craziest thing that I've seen lately is, like, I've got brokers calling us up going, "Hey, I'm using Replit, or I'm using Base 44, or some of these AI app builders." And then, like,
what are you going to say about it? Maybe we have the same sentiment, or maybe we don't, but please tell me what you're.
Yeah, it excites me because it's like, like, for the first time ever, like, you don't need to have an engineering team behind you. You could just ask these tools to kind of build some tools for you as a broker. Mm-hmm. Build me a calculator. It'll build that calculator for you. Build me this. It'll build this for me. Build me my website. It'll build a website for you. It does a ton of those things. But brokers are becoming more tech savvy. That's what excites me. More data driven. And they're realizing that they can compete head on with the biggest lenders if they have the right tools. That's powerful.
I love that. Part of my issue right now is with that stuff is they're, again, just making sure that they stay focused on not the shiny object.
Yeah.
Because I'll have people come to me and tell me about, like, the different apps and how Google Studios right now allows you to do some fun stuff with inside of it. But what I try to tell them is, like, they're trying to build, a lot of them are trying to build these, like, very intricate, dialed in, like, no. These are for simple systems.
Exactly.
Like, this is simple. If you're spending 30, 40 hours of your time on this as a production driver, you're not doing it correct. Right. So you just have to find that balance. But I agree that the beauty is with ChatGPT and Gemini and all these different things, it's making the access to information so much easier. And what it is doing is giving confidence to people about using tech and understanding it more. And I think that confidence boost is what will help the industry dramatically, because it'll help change policy. It'll help them understand where the cost of a loan is actually coming in. It's all these layers. People don't realize it's all these different layers of people that want to just get paid. It's really that simple when you look at it from the big picture.
That's right.
Last question for you here. When people look back on your leadership, what do you hope they say about you? That you protected the industry, that you improved the industry? Like, what would make you, sit there and maybe you're not an emotional guy, but hey, maybe you might strike a little tear if you hear somebody one day you're accepting an award and they talk about your impact to the space and to the industry?
Wow. I mean, I hope that people say that I led with integrity and vision. That I built something meaningful without compromising on values. I want to be remembered as someone who empowered others, especially internally with our company, or the broader industry, to think differently and push boundaries. I think at the end of the day, success for me isn't just about building great technology. It's about building people and leaving the industry better than I found it today.
Thank you, brother. I appreciate you. Any final closing thoughts from your end, my friend?
No, I've got to congratulate you. I mean, like, you've done such a fantastic job with AIME and everything else that you do. Whatever you touch turns to gold. I just recently saw an episode of how you raised, was it $80,000 or something like that?
Yeah, we did it.
That was touching,
Hall of
man.
AIME.
I mean, that was touching.
Thank you. We give back, man. It's I'm working hard. You're working hard. Like it's funny once you realize that the hardest part about what we do is you go into there wanting to be the hero in your story. And then what you learn is like, no matter what you do, you're always going to be a villain in someone else's story. So instead, like my approach is I'm just going to go in and try and tell a story. And maybe this book isn't for you. And that's okay if it isn't for you, but this is my book. And that's kind of been my new approach to life. I do want to be a hero a lot of the times. I feel like I am, but it's just not the case, right? Like you can't be the hero to everybody. In some stories, you're going to be the villain, and in other stories, they're not even going to like you as a character. And that's okay too. But that's been it, Dawar, and it's been the most humbling experience ever. I've gotten a lot more into my faith, and that's it. Just trying to like make an impact when you can, and try to make the right judgment calls. And you don't always get them right. And I really appreciate those words, man. I really do. It means a lot.
I think faith, family, really drives you forward.
Big time. And it is like once you find a bigger purpose than yourself, I've had my purposes on money, on women in the past. I'm happily married now. All right. But cars, just keeping up with the Joneses, especially in the Middle Eastern culture, that was a thing growing up.
Yeah,
exactly. Like from that perspective. And like once I got past all of that, and it hasn't been that long. I can't sit there and tell you it's been a decade of this. It hasn't. It's been the last 3 to 5 years of my life where I've really focused on that. And faith is just I'm submitting to something way bigger than myself, and I'm not focused on the other stuff. And it's funny, once you do that shift, things just start to work in your favor. And so that's just, God willing, what I continue to focus on.
Yeah. Thank God.
Thank you too, man. Thanks for being on here. I appreciate y'all. To our AIME community, tune in to the next one. As always, Dawar from Lender Price, providing value and impact to this community every step of the way. If you haven't leveraged Lender Price, AIME has you set up. It's in your portal, easy to log into. They also have a consumer-facing opportunity. Think Banking Bridge, except on steroids. Better for you, easier for you to leverage, much more affordable, and helps you maintain retention. That is the biggest push right now, coming from the largest companies in our space. So what are you doing to keep up with it? My challenge to you is find something. You can't be doing nothing. Take care, my friends.